Oh no, Tiff Macklin, what did you do as the Bank of Canada raises interest rates for the 10th time? There is now a palpable blowback. Do you think it was the right call or do you think it was necessary? Jump in the comments. I definitely want to know. Welcome to your Canadian real estate market update. We're going to go over the headlines. We're going to dig into the statistics, and I'm going to show you some info from behind the scenes, what's actually happening, boots on the ground, so you are equipped to make the right decision. If it's your first time to the channel, welcome. I'm Justin Conoco, one of the co-owners of Prime Real Estate, the most trusted name in real estate, with my amazing wife and partner. She holds an MBA from the Richard Ivey School of Business. My background is marketing and advertising, but I am actually in production, boots on the ground. We run an incredible team that covers all of Southwestern Ontario. Something very unique about us is we do residential, investment, and commercial. So we see all asset classes, and we can give you a very balanced perspective as to what's happening in major as well as micro markets, because as much as you may be paying attention to the headlines, real estate is a micro decision, and we're noticing some patterns that I'm going to share in this episode that you're definitely going to want to pay attention to. Another important thing is I am not for sale. I do not care if you buy or sell with me. Yes, I'd love to connect with you if you're doing something in Southwestern Ontario, or if you need an agent anywhere on the planet, but this information is free. I'm not going to send you fridge magnets and calendars, and I don't need you to buy with me in order to be okay. So I'm not going to tell you just buy. I'm going to give you the facts. So first off, as I mentioned, the Bank of Canada increased the prime rate 0.25% up to 5%, meaning that if you look at what people are qualifying at today, it can range anywhere in the 6s to the 7%. Add the stress test, all of a sudden, some people are having to qualify at 9%. Are foreclosures coming down the road? All I can tell you is boots on the ground. A lot of people have made these adjustments over the last year and are already getting ahead of the puck. People that did lock in at incredibly low rates at 1.75s or whatever that may be, bought those properties for a fraction of the price that they are worth today. So yes, the interest rate may increase dramatically, but a lot of those people are cashing out and then moving to different markets. I told you I'd give you some insights. We are seeing downsizers like crazy. People coming from the GTA selling their places for 2.5 and buying a smaller place for 1.5 to 1.8 in our territory, or people selling for 1.5, buying 700s, and so on and so forth. I think you're going to see quite a bit of transition in the commercial space. A lot of people are saying office is dead. I don't believe that to be the case at all. Maybe you're going to deal with some major pushback in large market centers where people don't want to go into the office 7 days a week, but we're seeing a big resurgence of hybrid work. 30-40% of the time, team culture in office where it makes sense and it adds value. In other cases, we're a lot watching large offices move their entire infrastructure down the highway. So their team may be centered in Toronto, but maybe they're living in places like London and commuting once or twice a week for the affordability standpoint. We're also notice on the industrial side, a lot of outfits that would normally be looking at other major market centers starting to look at Southwestern Ontario as a place to plant roots. If you're buying, selling, or investing and you're thinking of 3 to 5 to 10-year terms, those are the timelines where all of a sudden buying at a discount now, even though the rates are higher, does seem to make sense. Where it does not make sense to buy real estate is if you are day trading, expecting prices to go up in a year. I would be very, very cautious. I would not be surprised if they raise rates again or hold rates. So you need to do effective fiscal planning. We've lived in a spending society for the last 10 years because leaving your money in the bank didn't make sense. You were literally losing money because of what you could do with that money out there in the field. But too many YouTube real estate agents were saying, just over leverage yourself to death. You can't possibly go wrong. And now it's coming back the other way, where saving is starting to make a lot more sense. So what we're noticing is the people that are finding success, they are getting their fiscal house in order. They are remargining their businesses on the commercial side, but so are investors and so are residential buyers and sellers. The blowback I definitely want to talk about. I have seen articles like this blasting the Bank of Canada for increasing the rate again, mainly because housing is the largest contributor at this point to the increase in inflation. If you took out housing, the 3.4% inflationary rate that we're looking at right now would actually be at 2.5. They said their target is 2% by August. Looks like we're going to hit it, but they keep increasing rates, moving the goalposts down the road. This is obviously the spike that we saw. If you see 2020 at the low peak, I mean, they were giving money away for free at this point in time. This is the spike, June 1, 2022. 10 rate hikes later, this is where we're at. Where do you think the CPI should be? Do you think that actually increasing the rates was the right move this time. I do think that they should continue to raise rates. I would love to know. Just jump in the comments and let me know. Now let's dig into the statistics, my favorite part of these updates. I love looking at data all the way back to 2010. I'm going to go to the average sale price, not the median, because the median can shift depending on if you're in a small market like a Grand Band, a larger market like London, or a bigger market like Toronto. But the average price is $821. If you look at January 2023 to now, we've actually seen an increase in the average price. Obviously not anywhere close back to the peak, but like I said, if you're buying on a 3 to 5 to 10 year trajectory, this line, if you got rid of this whole section right here, would likely continue to trend this way. Obviously, macroeconomics play a lot into it. What is happening from a global perspective? And I say be very, very conservative with your purchasing, but not purchasing isn't necessarily the answer either, because if we continue to have an inventory shortage and people come back to the marketplace and rates normalize, you may have wished that you bought something in this section waiting for the bottom. Nobody in the history of real estate has ever timed the bottom, nor has anybody timed the top. Real estate is an opportunity-based industry. Now let's talk about the number of new listings. This chart always makes me laugh because you can see how cyclical it is. I'm going to go down to a 3-year trend line so you can kind of really see where we're at. So 2020, the number of new listings coming to market. December always seems to bottom out. Spikes till about May. But this is where we spiked in May. So the normal spike is actually below the number of new listings. So less new listings than we had same time last year. Keep in mind, last year was crickets because people had no idea what was going to happen with the interest rate cycle. Now it seems like the number of new listings coming to market is stabilizing, which is a very interesting stat to watch. Let's go back to the total number of homes for sale. Although it feels like every house on the planet is for sale and oh my gosh, there's so much inventory. We've got 18,848 homes for sale on the ITSO board, which comprises many boards in Southwestern Ontario. It's actually less than if you go back to September 2019. And fun fact, I talked about remargining your businesses. We look at our actual business planning, looking back at our 2019 numbers. 2020 to 2022 was not real, folks. The government printed 40% more money than we had. The world was in absolute turmoil. So if you're going to run a baseline for where you should be at, I would say look back at 2019. The total number of sales, 7,387, which is marked lower, but still very close to where we were last year. And if you look at the years before that, May 2020 actually had significantly less sales than we saw this May. And that was 2020, folks. Average days on market to me is a very important statistic. We are creeping up. We were 13 last month. We're 14 average days on market. If you notice, January it was around 30. This is a bit of a lagging indicator because the property that's cycling, if you list a property in December and it doesn't sell till January, it seems like a long time, but keep in mind the seasonality of real estate. Still 14 days on market. If your property hasn't sold in that 30-day period, it is priced, it is condition, or it's marketing in that order typically. Months of supply seems to be going up very high. So 4 months of supply is what's deemed a balanced market. I believe we're already currently in a buyer's market. At the same time, you don't have to give away the farm. If you're a seller, you can fight for your price. You just have to have the right pricing and marketing strategy and fight on the negotiation side. If you're on the buy side, maybe you can beat up the sellers a little bit and get a good deal. But again, opportunity-based, folks. This isn't a macro conversation. Not all buyer agents, not all seller agents are created equal, nor are buyers and sellers. Percentage of original list price. This is the peak of the market, 119 over. So you'd be, $1 million property would sell for $1.19 million. And now we are 98.9% of list price. That's the median. If I go over to the average, you're 100% of list price, which is shocking to people. Now let's talk about percentage of original list price. And this is if I list a price for X property, what does it end up selling for? It looks like it's actually at 100% as of June. The percentage of current list price is 99.1. So people thinking I'm going to lowball everything and I'm going to steal this property. On average, most properties are selling much closer to list price. I think that's because sellers are getting a lot sharper with their pencils. They're pricing a lot closer to what the market's at because they want to move the property. They don't want to end up in a reduction cycle and they just want to move it. And price per square foot is actually increasing. So December was 407. We're all the way up to 450, which is a good sign for the market in general and people holding fast to their prices. And last but not least, total volume of real estate sold, $6 billion, which is June 2023, above what it was June 2022, below June 2021, but above June 2020, which is shocking because people feel like, oh, nothing's selling. Things are selling. It really depends on what the asset type is. So the next chart I'm going to share with you is something that I want everybody to pay close attention to. First, absorb the beautiful photo of the Grand Band Beach. That market is on absolute fire. If you're curious about micro markets like Grand Band, let us know. We sell a ton of real estate all along Lake Huron. We know the history of the water levels and where to buy right so that you're making the right decision. But here is a stat that you can pull off CMHC's site, and it is about new housing starts. What I want to highlight is, keep in mind, this is from May. And look at the stats across Canada, 31% less housing starts than in previous months. I think this is going to continue to decline because the economics of a lot of these projects aren't making sense. If the economics don't make sense, the builders are not going to build. What is that going to do to the housing stock? Well, the whole reason they're raising the interest rates is get inflation under control, cool the housing market, make it affordable for our kids. What's happening though is they are curtailing further inventory, meaning bringing in 1 million plus people a year to Canada. We're taking housing offline. We're looking to force people that already own homes to sell them to take some pressure off the housing market, but we're not bringing new product to market. So think about what that happens in 2 to 3 years. If every year that becomes a compounding problem, first, when people sell their houses, they have nowhere to go. They're going to have to go to rentals. We all know that we're in a rental crisis, so that's not going to alleviate the rental crisis. But Justin, we're going to get rid of investors, and all of a sudden, investors are all of a sudden going to unleash tons of inventory, and all these houses are going to be available. No, they're not. They're going to sell those properties at a discount to other investors who are probably going to keep a lot of those tenants in place. Or if they do displace those tenants, you're creating more of a housing crunch or a housing problem. The actual key to solving the housing crisis is going to be getting people back to digging and building appropriate housing. Yes, at a price point that has to make sense. Affordability has to be there, but it has to be an all-encompassing solution. The last chart that I'm going to share with you is a very important one. It is talking about new housing starts in Canada. And you can go province by province if you want to look at the chart, but let's look at 31% less housing that's being built today than was being built last year at this same time. I think this is one of the single biggest problems coming down the pipeline. I understand why they want to make housing affordable. I want the future generations to be able to afford a house. I understand why they want to take investors out of the market because they think that that's going to solve the inventory problem, when in reality, it's not going to. There are fantastic investors out there and there's bad ones. There's fantastic builders out there and there's bad ones. There's fantastic tenants and there's bad ones. You can't paint an entire group of people with one brush and act like they are the whole solution. So as they're cranking the interest rates, they're pushing people to the resale market. They're putting people in a position that they're going to have to sell their properties, but you're just exchanging already existing properties for already existing properties. If I sell my house and I can't afford to buy, I'm going to rent, putting more pressure on the rental market, driving rents up, making more investors come back. It's going to be a cyclical problem. Dropping new housing starts, builders aren't going to build if the economics don't make sense. They're going to build spec homes and they're going to chug along and they're going to build good quality product until it makes sense to build again. But there's going to be a combination of material costs have to come down. The trades have to be there, the skilled trades, which we don't have enough of those. And there has to make logical sense from a development perspective and from zoning compliance and being able to turn around a site, not having to wait 3 to 5 years to get shovels in the ground, because who knows what the market's going to be then. But if you're looking to build new, and this is the secret I was going to give you, I actually think you are going to have a window in the next year to maybe 2 years, depending on how rough the markets get, where buying new is something attainable to people because people want to move product that is already existing and already in the pipeline. Are some deals not going to make sense? Sure. Is pre-construction great for everybody? Not necessarily. You have to analyze the deal and you have to have the market expertise to know if that makes sense for you, or even if you should be purchasing. Make sure you work with a power team. We can connect you with one if you don't have one. But in 3 to 5 years, 5 to 10 years, I truly believe buying new is going to be a luxury at best for some people. Do we forget that 2 years ago, you couldn't even get into a building site? It was just an absolute bloodbath when it came to new home construction. The puck is always moving. Watching the real estate market is like watching 5-year-olds play soccer where the group of people kick the ball out and everybody just rushes there. You want to be that one smart kid that is standing where the ball is going. So hopefully you got some value from this real estate market update. Let me know your favorite parts of the update, anything I didn't cover, so we can cover it in future episodes. Again, we are just here to serve you what we are seeing, boots on the ground, the information you're getting today. You're only going to read about in the paper in 60 to 90 days. So smash that like, smash that subscribe button so you don't miss any future episodes. And if you want to connect with me or the entire Prime team, let me know. Our information is below. We would love to meet with you and help you get situated. If you're looking for an agent anywhere on the planet, we have the very best Prime partners, and we'd love to connect you with them. But I'll see you on the next update.